Hello and welcome to the Mutual Fund Guide. It's all about your funds and your returns. I am Muralidhar Swaminathan. Joining me on the show today is Mihir Kaji, CEO Alpha Investments. Mihir, welcome to the room. Thanks for joining us. Pratik from West Bengal has mailed us this query. He has invested through SIP in Axis Long-Term Equity, ICICI Pru Long-Term Equity, ABSL Frontline Equity, UTI Transportation and Logistics Fund, Reliance Small Cap, HDFC Mid Cap, Franklin India Tax Shield, Reliance Tax Saver, Franklin Build India, SBI Healthcare Opportunities Fund, DSP Small Cap, ABSL Tax Relief 96 and HDFC Tax Saver. That's a very long list of funds. I think he has bought everything that he wanted to buy. He was like buying shares. Your thoughts?
Yeah, so also he has mentioned that he has been doing this for the last 4 or 5 years.
Yes.
And so he has invested around 70 lakhs so far. He is doing an SIP of around 36,000 per month, which comes to around 4.32 lakhs per annum. Now the interesting thing is that out of this 4.32 lakhs, he is putting 2 lakhs in ELSS funds.
Okay.
So the first thing I want to tell Pratik is that I'm sure you must be knowing, but if not, I just want to bring it to your attention that the ATC exemption limit is only 1.5 lakhs per annum. There is nothing wrong in putting more than that into ELSS funds, but I just want you to be mindful of that. Now, coming to your ELSS funds, you have 6 of them. Out of those 6, 4 are large cap oriented ELSS funds. So you have the Axis, ICICI, HDFC and Franklin, which are all investing 65 to 75, 80% in large caps. And the other 2 funds that you have, the Birla Tax Relief 96, that fund has 40% in large caps, 40% in mid caps and 20 in small caps. And the Reliance Tax Saver has 60% in large caps and 20 each in small and mid caps. So, while all these funds are good, I don't think you need 6 of them. So maybe, you can just in order to get a better mix of market caps in your portfolio, maybe you can shift some of the money into the Birla or the Reliance Tax Saver funds. And since you have the lowest investment in the HDFC Tax Saver, maybe you can stop that and get out of it whenever the lock-in ends and invest that money into the Birla and the Reliance Tax Saver funds, which you already have. Now, coming to your investments other than the ELSS, see, you have 2 large cap funds, you have 1 mid cap, 2 small caps and 2 sectoral funds. One thing I want to tell you is that you should exit from the sectoral funds, not because there is anything wrong with that, but because as a retail investor, making sectoral calls is not what you should be doing. We should leave that to the professional fund managers. If they think a particular sector is interesting or a particular stock in that sector is interesting, they will add it to their portfolios. So I would recommend that you exit from the UTI Transportation and Logistics funds and the SBI Healthcare fund, and maybe add another mid cap fund to your portfolio, something like an Axis mid cap or a DSP mid cap or Franklin India Prima fund. And I think overall you have a good portfolio. You have invested 17 lakhs, you are putting in 36,000 every month. I would encourage you to increase your investment by around 10% every year, so that you would be save more and invest in an asset which appreciates over time and which will be helpful to you in your later life.
Right. On the sectoral funds, Mihir, I want to add a point. Logistics, transportation, SBI healthcare, pharma, infrastructure, these are the kind of sectors which are struggling to grow. Anybody in that business will always have a high debt, very low cash on their books. Cash flows will be hit. So there is no point going into that one. And pharma, of course, is a very complex area. If at all anyone wants to look at sectoral funds, very clearly, I think FMCG, the consumption story, that is an evergreen story. It will always continue to grow, but it will have its own problems.
Right.
But then at least it's relatively better. Then the other sector is IT. IT funds, I think the last 1 year, if I see, the performance has been the best. But very clearly, when it comes to IT, where do the fund manager put the money in? They will put it in TCS, Infosys, HCL Tech and Wipro in that order, and some mid-cap stocks. Now, if 40% of the fund goes into these 2-3 large companies, you must be very clear that these companies don't have any cash flow problems. On the contrary, they have huge cash on their books, whether it's TCS or Infosys. So if at all you want to do sectoral funds, select the sectors which are insulated to many other vagaries in the economy, and which are continuing to grow, banking and financial services,
Right.
for instance. So these sectors could be there, but you need to have, like Mihir pointed out, you need to follow the trends, only then you should be able to get into it. And in case you don't have the time or appetite to do that, simply don't go there. If somebody, if your fund advisor tells you that you invest in a transportation fund, you should be able to ask those questions.
Yes.
If you can't, then just don't approach that one. And if you are in a position to distinguish from one sector to other, then you are taking an informed call. Okay, on that note, let me move to the next query. Devesh Agarwal from Gwalior, Madhya Pradesh, has mailed us this query. He can invest 10,000 through SIP. He wants to know if mutual funds are good investment vehicles and which funds he should invest in. He has not given a time span at all.
Yeah, yeah. Well, currently, Mr. Agarwal has been investing in bank FDs. He said for tax benefits. So I'm assuming he's been investing in the bank FDs which have ATC benefits,
yeah.
or maybe something like a NSC. So I am assuming that he is a conservative investor and probably a senior citizen. So I would like to say that Mr. Agarwal, mutual funds surely are a good investment avenue, depending on what your investment needs are. And I would also like to tell you that it's not that mutual funds invest only in equities. There are many funds which invest only in bonds. There are many funds which invest only in equities, and there are many funds which invest in both equity and debt combined. So there are various schemes which cater to different investment objectives of the investors. So you need to be mindful of that. And also I would like to mention here that there is no guaranteed return in any of the mutual fund schemes. But having said that, the short-term volatility is more than adequately addressed by the higher returns that you get over a period of time. So what I would recommend to you is that you do some introspection, think about your investment objectives, how much time you are willing to give to your investments to reach those objectives, and your risk profile, and how comfortable you are with volatility in your portfolio. And then you can get in touch with some fund advisor who you know and trust, and then take it from there. And since I don't know more about your profile, what I would recommend you can start off with is something like the balance fund or the hybrid funds, something like ICICI Balance Advantage Fund or HDFC Balance Advantage Fund or Birla Balance Advantage Fund. Now, these funds invest in both equity and debt, and while it is not that there is no volatility in them, but the volatility is lower than pure equity funds, and they stand a good chance of giving you better than FD returns and even better than inflation returns. But I have to again tell you that there are no guaranteed returns in mutual funds, and also there are no guaranteed dividends in the mutual funds. So if you are going to invest in these funds that I just mentioned, please keep this in mind, and also please keep a time horizon of at least 3 years.
Right. We have time for one more query before we slip into a break. Krishnamurthy is on the line from Bengaluru. Good afternoon, sir. What's your query?
Good afternoon, sir. Thanks for the opportunity. I have 3 mutual funds where I put 3,000 per month. So one is Access Long-Term Equity and Media Asset Emerging India Fund, and one is Motilal Oswal Long-Term.
Okay.
My question is, the time horizon I'm looking at is 10 to 12 years. Okay. And also I wanted to know from the experts, is there any small cap or any hybrid fund which I can invest in around 3,000 to 5,000 an SIP? What's the suggestion, and what is the outlook for these 3 funds in 10 to 12 years time frame?
Sure, I think that's a good question. To add a small percentage in a small cap for a long term is a good idea. May hear your suggestions.
Yeah, so Mr. Krishnamurthy, the first thing I would recommend to you is that you need to have a figure in mind that you will need for your daughter's education, let's say 12 years from now. And the way you can get to that amount, that figure, is that, think about if your daughter was to go for higher education right now, how much would you need to spend? Let's say, you need 20 lakhs for the higher education as of now. So you adjust it with inflation at the rate of say 7%, and then that 20 lakhs right now becomes 45 lakhs in 12 years. So 12 years from now, you will need 45 lakhs for her education. And then you need to backtrack and calculate how much you need to invest in order to get to that 45 lakhs. Assuming a conservative 12-13% kind of return and 7% inflation, you will need around 14,000 per month, SIP of 14,000 per month to get there. You are doing currently 9,000. So I would encourage you to save more, spend less, and try to increase your SIP amount by at least 10% every year. As for the small fund recommendation, I would encourage you to take a look at HDFC Small Cap and Franklin India Smaller Companies Funds. Both are good funds that you can take a look at. Also, looking at your portfolio, I would suggest that you should add a large cap fund to it, maybe something like ICICI Blue Chip Fund or Aditya Birla Frontline Equity. And you also have 2 ELSS funds. Out of that, the Axis fund is fine. You can continue with that. I would recommend that you switch out of the Motilal fund and instead put that money in something like Aditya Birla Tax Relief 96.
Right. Do you think he would require an asset allocation fund to balance out the returns and shocks?
Yeah, but he has 12 years.
12 years, okay,
So
long
he has
term.
a good enough time horizon, but surely he can take look at balance funds or asset allocation funds. But given the time horizon and given his age, I think he should be fine with this folio.
Yeah.